So this will be a 2 days event, today and tomorrow. So today the mode of explanation will be in English and tomorrow it will be in Hindi. So you can join both, and the discussion subject will be intraday trade in options using the one standard deviation software. You can also use our web calculator, which is our free calculator. You can use that also. That has limited accuracy. However, you can able to use that also. So that web calculator also you can use. And once this recording will be given, please go through this recording couple of times. Until the end you can just experience different analysis. So that will be the best way to work on these concepts. And coming to the software, if you see in this particular software we have given 3 option features. One, option monthly, all stock option, index option, monthly contracts you can able to trade. You can able to trade for the weekly contracts, and we have also given one option scanner. So this will tell you the appropriate strikes which you can trade for intraday. So these 3 features are available in the software, and I'll be discussing on those 3 features. Most importantly, you should know how to choose a strike to trade in the options, specifically for the intraday trades, because every script will be having number of strikes. All strikes will not be suitable for intraday trade. That is very important, and that also you need to understand very carefully. Those who are not having our software, paid software, which is everything is automated, not have that paid software, you can use our free stock also. So here if you just go to the calculator link, you can get one intraday option trade software is here. Currency option trade also we have given one separate calculator format. So here once you go to this particular page, you can able to punch some data, then only you can able to do these things. And as I have requested all of you, once this event is over, try to see this recording till the end, and here 2-3 things is very important. One, choice of strike and some basic understandings on options. So those who are experienced traders, they will be knowing it, but those who are the new traders, when you buy a call option, it gives you profit in uptrend. When you buy a put option, that gives you profit in downtrend. So in uptrend, 2 choices are there. You can buy a call option or you can sell a put option. Uptrend, buying of call option gives profit. Selling of put option also gives the profit in uptrend. Similar way in the downtrend, call option sell gives the profit, as well as the put option buy gives the profit. So this is the nature of the options. Those who are the experienced traders, they will be knowing it. However, those who are the very beginners, for them only. Now coming to our option intraday trade. When we just do the intraday trade, how we should do this option intraday trade? 3 steps are there. First, the underlying asset. So options are being derived. Nifty option means underlying asset is Nifty. Tata Steel option means Tata Steel is underlying asset. So it is derived from which asset, which script. That underlying asset need to be analyzed, because option is a derived thing. In options, what major mistake the traders used to do, all Fibonacci, pivot, all those things directly they put it in the option premium. So then they said that no, it doesn't work. Option is a derived instrument. Directly putting those option premiums into the different methods, it won't work. So for that reason only, the underlying asset need to be analyzed, the trend analysis of this underlying asset need to be done. Then you have to identify the type of option to buy or sell based on the trend analysis. As I have told you earlier, call options you can buy in uptrend, or put option you can sell in uptrend. So type of option is call, you are buying because trend is up. Type of option is put, you are buying because trend is down. So identifying the type of options to buy or sell based on the trend analysis. This is your second step. Then the third most important step is identify the appropriate strike. So the strike which is having a higher probability to become in the money, on those strikes, the theta decays and vega decays will have lesser impact. So the strike which is having lower probability to become in the money on that particular day will have higher theta decay, higher vega decay, volatility shrinking effects or time value shrinking effects. So you need to identify a proper strike to trade for that. So we'll go for analysis. So this is the three steps are involved in option intraday trade. And as I have told you, this particular software we have three features: option scanner, option weekly, option monthly. So anything you can trade. So I'll be starting with the option monthly. So I am just going for the index options. So for that, the symbol should be Nifty. So I'll be just loading the data. Once the data is loaded, I'll be getting one reference 11,530. So this is the reference it comes. So here, if I'm going for 11,500 call, so this is at 213 rupees it is trading. I'm just calculating it. So I'll get a lot of information here. Currently, this is the future underlying, and it is having a 80 rupees of oscillation. Underlying price range is 80 rupees. So today, any strike, so I have just chosen the nearest strike. Any strike which is 11,514 plus 81, 80 rupees 72 paisa, I am rounding it to 81, or minus 81. These strikes means 11,514 minus 81. These strikes will be appropriate for my intraday trade. No other strikes, because these strikes only will have the lesser theta decay impact. So here theta is very high, 4 rupees 50 paisa, means time value decay by 330 will be losing 4 rupees 50 paisa of time value. Any 1% change in the volatility also will bring 13% time value compressions or 13% decay in the option premium. That is also a fact. This theta and vega is very important factor. So here, this particular analysis is being done, and underlying price is 11,513. This is the future price. So this individual monthly options, whenever you are analyzing, future price is being taken, and this is giving you two important factors here: underlying volatility 41%, implied volatility 13%. Because this 41% of underlying asset volatility is coming, because in the 19th and 20th, the previous periods, you got a huge move in the market for 2 days period. So for that reason only this kind of volatility is coming. However, implied volatility of these options are 13%. So implied volatility is 13%. Can anyone will tell me if implied volatility is 13%, whether it is in the high volatility zone or low or medium? High volatility zone, very carefully listen to this. If option IVs are 20% plus option IVs, then it is known as high. Below that, it will be known as the medium volatility. So scale is 40%, above underlying asset volatility is higher. So here you are getting two contrasting things. Options are in the medium volatility band, and the underlying asset is in the high volatility band, 41% of, and that too also index is 41%. So that is phenomenally high because of this 2 days of great price action what happened in the index. But that is not going to impact our analysis because this particular tool doesn't consider this volatility at all. This has taken intraday volatility only. So this 80 rupees of variations has 80 rupees of expectations are being derived from this intraday volatility only, real-time volatility. So this has given you the clue that 223 above this particular call options can be bought, and it should have a stop loss of 202, and these are its target. And now the future is 11,490. 11,490 is the future. 11,490. So what you have to do here? Can anyone will tell me in this situation if I want to trade in call option? Can I buy the call option? Can I sell the call option? What I should do? Can anyone will tell me? Downtrend starting at 11,494 and I am at 11,490. It is at the downtrend. I can sell a call option. If I sell a call option, what will be my stop loss? 223. I can sell it. I can have a first target 196, second is 185, 186 and 170. If I want to buy here, I can go for a put option. So now the trends also has changed. Now the prices also have changed. Now I have to reload this data and see that what kind of reference. Now reference has also changed. So I am going for the put options, and earlier analysis given me that 80 rupees of oscillations I can think of. So I am going for 11,400 put option strike, and I am going to calculate it. So 11,400 put option strike I have taken. So I have analyzed. Now entire thing has changed. Now underlying price range also changed to 103 rupees, which was 81 rupees earlier. Now it has given a, because fall in the price brings the volatility increases. That is a 20 rupees expansion has happened, and it is telling me at this moment if I want to trade in the put option, I need to wait for this 11,465 level to break, then I can enter. So I can enter the put options. I can buy at the range of 176.85, keep a stop loss of 157.73, and these are my targets. So now price range has changed, trend parameter has changed, entire thing has changed. So entire thing has changed for the put option analysis. So this is individual strikes once you are analyzing. But thing is that individual strikes, here you are deciding the strikes to choose. You are deciding that which strike I should pull it out. So now if I go for the same thing in the scanner, option scanner, this simplifies a lot and lot. My works will be get simplified like anything. So here I will be just loading all the data. So it is just fetching all data, and here we are using the spot price as a reference. Why? The reason is we are going to analyze all strikes here. So here I have just fetched all monthly data, and everything is got analyzed here. All call options and put options have got analyzed. Now I am going for say put options. So I have three options here. So one is greater than, less than, and another is between. So here I want to buy the strikes between sell entry and targets. Today, which are the strikes are coming between the sell entry and targets? So this is based on the spot price. You can say underlying spot price. So here today it is telling me that now spot is at 11,422, and it is telling me that if I want to trade as for this, I can think of buying the 11,350 or 300 or 250. Why these three strikes are being chosen? Why not other strikes? Entire strikes I got it. But why these three strikes? What is the benefit of these three strikes? These three strikes for the day, for today, very carefully listen to this. For the day, which is today, it will have the lesser theta decay impact. Lesser vega decay impact. So today, these three strikes will have that impacts. Sometimes you may get 4 strikes also. Any out of these 3 strikes, you can trade it any strike here. So here one thing you just, another one very small but very powerful clue I am giving you. Very small and very powerful clue. Imagine you are buying this particular strike, 178, and just 20 paisa I am not taking. It has probability to go till 243. So 243 minus 178, so 5, and here so 3, so 6. 65 points of expectation is there. And if it's going for a stop loss, then it is 159, almost 160 you can say. 160 means 18 to 19 rupees you have the loss factors. 19 rupees you can lose. 65 rupees final target if you are coming, 65 rupees you can gain. Similar way, if I go for the 250 strikes, so it is having 139 if you are buying, 195 range it can come. So 139 to 195, so 195, same way we are just going to analyze here. 195, 139, so here 6 and 8 3 as 5. So 56 rupees it can gain, and the stop loss if you just see here, so here 23 to 39, so here 6 and 2 3 are 16 rupees. So here 16 rupees liability is there, 56 rupees reward is there. This one having 65 rupees of reward, 19 rupees of liability. This is what we have analyzed. Can anyone will give me a strategy out of that? Instead of buying a simple option, just 2 strikes I have taken, 11,350, 11,250. I analyzed. If I am achieving the last target as per this calculation, then I may not achieve also. If I am achieving the last target, so this 350 strike having a chances to give me 65 rupees reward, and it has a risk of 19 rupees if the stop loss hits. Other one is there, 56 rupees of reward, 16 rupees of liability is there. Is it possible to form an option strategy out of that? Can anyone will tell me? And downtrend breakout has given, perfectly right. We can buy 11,350 put and sell 11,250 put. Great answer Saurabhji have. So Saurabhji is telling, buy this particular, so you have a 65 and 19 risk reward, and you sell here, even this 65, 56 rupees has come true, and this 65 comes true also. So 65 minus 56 if I can make it, so here I am getting 15 and minus 6, 9, and my liability is also being reduced to 3. So my reward, if I form this strategy by buying the 11,350 put option and selling 11,250 call put option, both are put option being taken with the down, when this particular downtrend breakout is being given, I am reducing my liability, which was 19 rupees in the single side trades, which I used to say 19 rupees with respect to 65. I am reducing it to 3 rupees with the great risk. This kind of strategies also you can form in intraday. If you have understood properly, you can form this kind of strategies, a simple bear spread strategy in intraday. This will be highly rewarding, very highly rewarding this kind of strategies, and very highly rewarding this kind of strategies. So you have seen there is a great fall is happening now. Most of the banking counters, 5-6% fall has happened. Nifty also has come down to 11,482. 11,482. This level also has come. 11,477 also it has come. So now when we did the analysis, it was suggesting us that we need to wait for the Nifty spot levels to come a level of 369. So when we did the analysis, same way if you want to do the call option analysis, I can download the data, because during our conversation also a lot of rates would have been changed. So I am just going for this call option data. So first I am just analyzing all options, call option, put option, everything. So I am going for the call options data. I am going for this other option, call options to buy in uptrend. One great correction has happened. Now if I want to buy the call options in the uptrend, so it is telling me call options can be bought in the uptrend when the Nifty spot. So call options can be bought in the uptrend 11,388. Now we have crossed the 430 level. We have come 430 level. We have come. Or between option also you can say that here strikes to buy or strikes to buy between the buy entry and target. This option also you can see. This is only suggesting 2 strikes. So this is how you can use the scanner. Now go for the weekly options. Very interesting too. And this is also, as I told you, weekly options initially it was not there in our application because of some IV errors. Now we have added this particular concept. So 3rd October we have this particular weekly options values, and these two also weekly options also, except the monthly options. Weekly options and option scanner both take the spot price reference. So very carefully listen, those who are using this tool, spot price reference is being taken for weekly options as well as the option scanners. So these two things is very important. Now going for this particular analysis. Now you have seen that 428. So my nearest strike, let me go for the 400, 11,400 call option. So calculate this. And weekly options are available only with the Nifty and Bank Nifty. No other symbol is having that weekly options. So weekly options is only available with this. But here one great thing you can get it here. Just see the IVs, implied volatility. 49%, 50% in index. 50% in index is a great IV. Can anyone will buy in this situation? 30 rupees of theta per day decay. So you can say here, if I am just going for 11,400 call option, I have this kind of theta. If I go for 11,500 call option, these two also have a theta of 30 rupees. 11, and that too also it is trading at 200 rupees. 11,600 call option, if I go for these two also, you will get 29 rupees of theta. So here I got a 400 call option which is at 257 rupees. 257 rupees when it is being pulled out. And if I go for 11,600 or 700 rupees, 700 call option also, and calculate. And these two also having 27 rupees. Nothing wrong. Very carefully listen to this. 11,400 call options you can buy at this situation 3 days. 30 rupees of theta, it will have a decay. You can sell 11,700 call option. 700 call option. So 700 call option, 2 lots at 114 rupees each. So 228 rupees you will receive. 256 rupees you will pay, and you will be going on receiving 27 into 2, 27 into 2, so near to 54 rupees. This you can do. Next, this is one strategy or one plan which can implement 11,400 and 700. You must ask me, why not 600? Why not 500? How you have got it this 11,700? See, 11,400 call options, I am getting a premium of 257 rupees. This is the price I am buying. This is the price I am buying. So I am just making that I need to choose a strike in such a way that this 257 rupees what I have bought, this should not be lost. If market goes up, I must not lose anything out of this 257. So I am just adding 11,400 added with 257. So this gives me 11,657, and I am choosing the next strike, which is 11,700. That's all. So this is the process. This is why I am choosing this strike, 11,700. So this is one process. You must tell me when to come out of this strategy. Market can go up also. So I have bought 11,400 put, call option. I have sold 11,700 call option, 2 lots. This I have sold. This I have bought. When I should come out? Till 3rd October, there is a possibility that it can go to 11,700. It can go to 12,000 also. When I should come out of this strategy? What is the appropriate time to book loss in this strategy and come out? Can anyone will tell me? So because here I have paid just 257 rupees and I am getting 228 rupees here. So 9 and here 4 to us 229. If by October 3rd, Nifty spot is trading at 11,429, I am at break even. October 3rd, if it is theoretical, 29, I am at break even, no profit, no loss. But if during this period prices goes up, when I should book the loss and come out? When I should book the loss? If it is goes up, if it is going to be above, say 11,700 goes to 12,000, it will be a great loss I can get. Imagine if it is going to 11,000 to 12,000 rupees. So here the 300 minus 150, 300 minus 114 per lot. So here 6, 9, 1 is 8. So here 2 was 1, 186 into 2. This will be the loss, and 12,000 means here 600 minus 260. So 600 minus 257. So this will be the profit in 11,400 call. So here 9 5 has 4. So here 5 2s are 3. So 343 profit. However, near to 400 rupees of loss. So there is a 50-60 rupees loss will be happening. So be very careful. You should not hold this position beyond 11,700. Very carefully listen to this. Once 11,700 comes, you need to book the loss and come out. So this is also a fact you need to remember. Your aim is to capitalize from the theta decay, which is going to come, and with this, if you have added a put component, then it is far better. Far better, you can add a put component also. Put component also you can add in that. So this is one strategy. You can form many strategies. Conversion strategy you can form. You can form butterfly strategy, that is short butterfly strategies, or wide wing long butterfly strategy you can form. So many ways you can take this advantage. The most simplest way you have understood. Theta is a great money. We want to convert that into the profit. So this is the things we can initiate to benefit from the theta decay. So this is for the weekly options. And and here too also same logic goes. So you have a price range of 241 points. So currently you are at 11,428. So very carefully listen to this. So 241 point or 42 point. So 242 points it is. That means you can choose the strikes till 650, 11,650 till the call strikes should be chosen for buying. Same way, 242 if you can less it from here, so you can say till 11,150 also you can buy the put options. So this is the range in which you can choose any strike to trade. So the very definition of this particular concept is when you choose a strike, that strike must have lesser theta decay. But here theta is very high, and this higher theta can be converted to a great profit. And why this theta is so high now? Can anyone will tell me? What is the reason why this theta is so high? Because of RBI review. RBI review is there. So you have RBI review. So for that reason only, the thetas are very high in this particular situation. Now, so three things you have seen here. One is the weekly options, monthly options, and third part is your option scanner. And those who are having the software, you can rely more on the option scanner. So I'm just going for some stock option scanner. So I have just discussed how to work on that. So I'm going for IndusInd Bank. IndusInd Bank. So I'm just loading the data. Loading the data. I'm going to analyze all call options and put options, whatever is available. So now I'm going for the call options, and I want the call options greater than the last traded price. So these are the things is coming. Call options, see all things I'm showing. So these are the strikes which is above the last traded price. Call options, this 420 above till 1800 you have all call options. So call options to buy in the uptrend. So I am getting this thing. So call options to buy in uptrend is here. IVs are here. So these are the 5 strikes it is recommended. And IndusInd Bank, this is future, so we will be going for the equity. So this is based on this particular analysis being done based on the spot level. So IndusInd Bank fallen, rised, fallen, now at 1400 level. So now at 1400 level, you are getting these things. So when you should buy these call options, at what level you should buy the call option of IndusInd Bank? Very rewarding. IndusInd Bank options gives a great reward in intraday trade. At what level of spot level of IndusInd Bank you should think of buying options, call options, specifically buying the call options. At what level of IndusInd Bank spot level you should think of buying the call options. 6 of our participant has told that when the IndusInd Bank spot level will come to 1404 level, I will be buying any of this strike, 1480, 1460, 1450, 1440 or 1420, any one of this strike I can buy. So how many of you are agreed with that? Bought these options, any of this strike, if it is falling down to 1389 level, you should close or book the loss and come out. So only buying of the options. Same way, this is for the IndusInd Bank, is a very high volatile counter, and spot is at 1402. So same way we can go for Reliance also. So we have seen the Nifty. Tomorrow we can see that whether these things has worked or not. So IndusInd Bank, once we have analyzed, let us analyze the put options to buy in the downtrend also. So put options to buy in the downtrend, this too also we can analyze. So these are the same between strike, we can say put options to buy, strikes to buy in the sell entry and target levels. So here too, these are the three strikes for if IndusInd Bank fallen down to 1389 level, you can buy 1350 put or 1360 put or 1380 put, any one of these put with these prices. So IndusInd Bank we have analyzed. Now we'll analyze the Reliance. So stock options, Nifty, many times I have analyzed. So now some stock options we will be analyzing with the help of this tool. So here I'm going for the call options and between. So here strikes to buy between buy entry and targets. So this is 1320, only one strike comes here. Only one strike is coming here. So buy entry and targets. So once it is, this is the only one strike comes in this particular. Strikes to put options, if I go for strikes to buy between the sell entry and targets, let me strike to buy between the sell entry and targets. Two strikes are coming, 1280 and 1300 put option. So these two also, Reliance, these two strikes it is suggesting. And you can also, other options also you can say that here, call options to buy in the uptrend. Here you may get some, so here you may get some other choices also. So here you can calls to buy in the uptrend rather than calls to buy in the uptrend. Here 2-3 strikes you may get. So these are the strikes it is recommending for the call options, and same way if you can go for the put options, you can go for less than or say greater than condition, you can go the downtrend. Because buying of option I am showing because many of you do not prefer to sell option because it invites the margins. So now IndusInd Bank has fallen down. If it is coming to 1389 level, we will be buying the put options. If it is going to 1404 level, we will be buying the call option. So Reliance also I have shown you. Reliance, it is 1321. The equity levels will be different. Reliance. So Reliance equity levels. So 1314, 1314 level. Reliance is trading at 1314 level. So the 1314 level Reliance is trading. So call options. So here rather than call option to buy. So 1314 level Reliance. So you can think of any of these call options to buy. Now it is in the buy entry, crossed and in the target one level. But here also you can think of specific strategies also. Nothing wrong in that. So nothing wrong in that. So if you want to form a strategy in this Reliance, how you will form? Intraday strategy if you want to form, how you can form in this? Simple technique is 1340 call you buy, 1420 call you sell. Why you are doing it? Because you are at uptrend. Uptrend breakout is being given for Reliance. So post you purchase, if the uptrend changed and it is going and hitting the stop loss of 1303, you have to close the strategy and come out. So 38 rupees purchase of call option will be that time 32. 13 rupees 60 paisa call option sold should be at 11. So your net impact will be here 6 rupees minus 3 rupees of liability. However, if it is going for the last target, so here your 38 rupees worth of investment will be giving you almost 12 rupees as a profit, and 13 rupees 60 paisa or 14 rupees worth of sell will be 19, so 6 rupees loss. So 6 rupees you can get it as a profit. So 1:2 risk reward, it works. So this kind of strategies also implement. So two things I am telling you. One, you can go with the direct options with a stop loss, or you can form the strategies for intraday purpose. So this is the way. If you trade in the options, it will be highly beneficial. So the 3 steps: underlying asset trend analysis, identify the type of options to buy or sell based on trend analysis, appropriate strike. These three steps you need to follow for your option trade to be profitable. IndusInd Bank given you the downtrend again, 1389 level. You can think of a put option. You can think of a put option strategies also. Reliance is in the uptrend. You can think of a call option buy or a strategy also. So Nifty is at a downtrend. So 65 level, once it comes, you can think of buying some put options. So this is how you can trade in the options. Any query, just take a couple of seconds to explain this. This particular product of one standard deviation software costs you 5,500 plus tax, 6,490 for 1 year. Post 1 year, it has a renewal cost 3,500 plus tax. So 3,500 plus tax and 3,500 plus tax. It has the post 1 year period of renewal cost. And first time it will be 6,490. This has this particular tool what you have seen here. And not only this, you can do equity analysis, you can do equity analysis, stock future, index future. Now you can say Nifty has fallen down and other things. And what will be the Nifty future level? If you want to trade in the Nifty future level, what will be the calculations? So here the calculations of the Nifty future level, if you want to do, or if you want to do for the Bank Nifty levels, that too also you can calculate here. Weekly trend levels also you can calculate in this level. So many things you can do in this particular software. Equity levels also you can analyze. So till that volatility phase is not cooled down, it is not to trade on the future. Man, if any drunken man is going to chase you, is there any meaning in having an argument with a drunken man who is fully drunk and going to chase you? What will be your response? Will you go and give a big lecture and make him understand that he is doing a wrong thing and make that things? So same way, what normally you to take, better he is not in his sense, better to avoid and go. Whenever you see a mad dog also, you do the same behavior. Same thing, certain times market used to go for that kind of hedges. You must know when not to trade. This is also one fact. I have also, those who have read, those who have gone through this article, which I have given in my site, when not to trade. So here also you will get one. I'll just focus on 5-step approach I have given to explain when to do trade and when not to do intraday trade. Just go to the article section, must read articles. So here I have given some very important articles. All of you should read that. Must read articles. You can go through at least these 3 articles, 3 to 4 articles. Best plan to win intraday trade. When to do intraday trade. These 2 articles you must read it. So that way you can refine your trade. So tomorrow we will have again discussion on the intraday trade in options. The language of explanation will be in Hindi. I'll repeat one very good thing also. One question has come actually. So he was telling me based on, because now one huge range is being set. So how to work in this kind of situation? So here one huge range is being set, and that so you can say, so whenever any stock we are analyzing, so I'll just reload that data and show it again. See to this. Those who are the user of this software, it will be very, very useful for you. So if you calculate here, what are the levels you are getting? 11,600, 11,500. All these levels will never come. So this is intraday levels. Very wide levels we need to get it. very wide levels, it may not be having any relevance with this. One more process we have added here. This is also real-time volatility. Just go for the positional option and just go for 2, because once the square root of 2 will be taken, it will be 1. So go for go for these calculations. So you will get in this level. So you can follow these levels. Whenever unstable levels you are getting as per intraday, it takes historic data and current data both. Since there is a huge movement is there, it is a mathematical tool. It doesn't understand why that 2 days of movement happened, but that has the role. That has the role. You cannot deny it. But still, you can use these positional options. Positional tool, what it does, it doesn't take anything what happened in the past. What happened in the past, it ignores. Lot of that gap days and other things it ignores, and it says that from today, from now onwards, I'm going to form a position. And if you go for the number of days too, so internally what happens, while the price range is derived, the number of days should be square rooted. So square root of 2, it will be less than 1. So it is also intraday level you can get. So by this process also you can use it. By this process also you can use it. If you want to learn, you just join this upcoming program. 5th it is starting. 5th of October it is starting. 4 days session. You will learn many advanced concepts. If you are interested, you can enroll for this program.